Hi everyone, welcome to my channel Let's Talk Money. My name is Diana and my goal today is to help you understand what is an IRA and how can it help you save money for retirement. Today I will be discussing what an IRA is, who can contribute to a traditional IRA, how much can you invest each year, are the contributions tax deductible, when can you take money out, what are the benefits, advantages and disadvantages of IRA accounts, and so much more. Just a quick reminder for those that haven't subscribed to my channel yet. Please support my channel by subscribing, liking, commenting under the videos. I do not get paid and I will not endorse any companies in this video, so the information presented is absolutely educational. Again, please consider supporting my channel by subscribing. Okay, so let's get started. What is IRA? An IRA stands for Individual Retirement Account. If you work, you probably have a 401k plan at work. If you don't have a retirement plan at work, then you can set up an IRA account for yourself. With an IRA, you can pay less tax on either the contributions or your earnings. Without traditional IRA, your investments can get taxed on both. You probably also came across a Roth IRA. What is it? I'll explain. So both traditional and Roth IRAs provide generous tax breaks, but it's a matter of timing when you get to claim them. So traditional IRA contributions are tax deductible on both state and federal tax returns for the year you make the contribution. Withdrawals in retirement are taxed at ordinary income tax rates. Roth IRAs provide no tax breaks for contributions, but earnings and withdrawals are generally tax-free. So with traditional IRAs, you avoid taxes when you put the money in. With Roth IRAs, you avoid taxes when you take out the money in retirement. And this is absolutely, it depends on a case by case. So in this video, we will mainly talk about traditional IRA accounts. And now let's see who can contribute to a traditional IRA account. The first rule, if you are younger than 7 years and a half, then you can contribute to an IRA account. If you have taxable compensation during the year, such as salaries, wages, tips, bonuses, commissions, and self-employment income, you are eligible to contribute to an IRA account. You can contribute an amount equal to your taxable compensation, up to $5,500, or if you are older than 50 years, you can also have a catch-up contribution and contribute $6,500, and that's for year 2018. Now, comes the most awaited question: how much of your IRA contribution is tax deductible? And the answer is, it depends. Your deduction may be limited if you or your spouse, if you're married, are covered by a retirement plan at work and your income exceeds certain levels. Your deduction is allowed in full if you and your spouse, if you're married, aren't covered by a retirement plan at work. So if you do have a work-related retirement account, you can still deduct your contribution as long as your adjusted gross income is below a certain amount. So for example, for year 2018, if your adjusted gross income is below $63,000 for an individual and below $101,000 for a married couple filing jointly, you can deduct your contributions on your taxes. These amounts are subject to change, and again, this is for 2018. Make sure you always check the limits and regulations to make sure you have the most updated information. I have a link to my blog under the video with more details. Feel free to check it out. If you do have a work-related retirement account, there is a phase-out limits for making deductible contributions to an IRA account. If you're married and are filing jointly and have an adjusted gross income above $189,000 or more, then the deduction of your contribution is completely phased out. Now, let's talk about the timing when you can take money out of IRA account. You can withdraw or take distribution from your traditional IRA at any time. However, It's very, very, very important that you know the rules regarding distributions from a traditional IRA in order to avoid penalties for early distributions. So if you are over the age of 59 and a half, your full distribution will be taxed as ordinary income for the year in which you take the distribution, which is typical. If you are under age of 59 and a half, your full distribution will still be taxed as ordinary income for the year you take the distribution, but you will also be taxed a 10% penalty. This is one of the most important things I want you to remember with the traditional IRA. If you decide to take a distribution before you are 59 and a half, not only will you be paying regular income taxes on the full distribution amount, but you will also pay a 10% penalty for taking an early distribution. I would never recommend you take the distribution from your traditional IRA before you reach age 59 and a half. Obviously, there are exceptions to this rule, and I will address it in a separate video. So really, what are the benefits of IRA? Well, one of the obvious reasons of investing money in the IRA account is that you create a pension fund for your retirement. The money grows tax-free. Another advantage is that the amount you invest each year can be a tax deduction, as I mentioned earlier. Let's also look at some disadvantages of IRA. Since the IRA is a retirement investment, there are certain rules. So for you can take out any money until you are age 59 and a half, but if you take distributions before this age, you will pay a penalty of 10% plus tax on ordinary income. Also, once you reach the age of 70 and a half, you are required to take the distribution whether you need money or not. And obviously, distributions are taxed. So if your tax bracket in retirement will be higher, or if the tax law changes unfavorably, then your distributions will be taxed at a higher rate. So to sum it up, the advantages are obvious. The main goal of setting up an individual IRA account is to save money for retirement. Besides, when you deposit money into your IRA, you reduce your taxable income by the same amount during your working years. If you're self-employed, you might want to check out our video about self-employed IRA or SEP IRA, specifically designed for those individuals that are self-employed. As always, thank you for watching this video and supporting our channel, Let's Talk Money. I hope you enjoy the information presented here and consider supporting our channel by subscribing, commenting, liking, and sharing our videos. We greatly appreciate it. Thank you.